Ever wondered how much of your hard-earned salary goes to taxes in Canada? It's a question that can keep many a diligent worker up at night. Today we're going to break down the tax system in Canada, looking at both federal and provincial taxes, as well as deductions, to give you a better understanding of where your money goes. Imagine you're an employee earning $100,000 a year. How much of that income will you actually see, and how much will disappear into the realm of taxes and deductions? To start, every resident in Canada pays federal taxes, which are the same across the country. This is a progressive tax system, where the tax rate increases as your income does. For someone making $100,000, the federal tax rate is 26%. Therefore, $26,000 of your income will go to federal taxes. But that's not the end of the story. There are also provincial taxes to consider. These vary by province, adding another layer to the tax puzzle. For example, in Ontario, the provincial tax rate for $100,000 income is around 11%. So, an additional $11,000 will be subtracted from your salary. In contrast, Alberta uses a flat tax system, meaning the tax rate is the same regardless of income. Here, the provincial tax rate is 10%, resulting in a $10,000 deduction from your salary. But wait, there are also deductions to consider. These are amounts that you can subtract from your taxable income, lowering the overall amount you pay in taxes. The most common deductions are for things like RRSP contributions, union dues, and employment expenses. Let's say you have deductions amounting to $5,000. This will further decrease the amount of your income subject to tax. So, after taking into account federal and provincial taxes and deductions, how much of that $100,000 will you actually take home? In Ontario, it'd be around $58,000, while in Alberta, it'd be about $60,000. This illustrates that where you live in Canada can have a significant impact on how much tax you pay. So if taxes play a big role in your decision on where to live, you might want to consider Alberta. To sum up, in Canada, your salary is subject to both federal and provincial taxes, as well as deductions. The federal tax is a progressive system, while provincial taxes vary by province. Deductions can help decrease your taxable income, potentially saving you money. And while taxes can take a significant chunk out of your salary, remember they also help fund important services like healthcare, education, and infrastructure. So the next time you find yourself wondering how much of your salary goes to taxes, remember this breakdown. It might not make paying taxes any more enjoyable, but at least you'll know where your money is going.